Adobe's sales guidance for its fiscal fourth quarter falling short of the street's estimates, and that's overshadowing the company's top and bottom line beats in its latest quarter. You're now looking at losses of just about 10%. That disappointing outlook bolstering some anxiety on Wall Street. The software companies are struggling to make money from hefty AI investments. So here to discuss is Alex Zukin. He is a Wolfe Research managing director and head of software. Alex, it's great to have you here. So talk to me about the reaction that we're seeing in the stock this morning. Shares are off 10%. Do you think that's warranted given the beats that we saw in the most recent quarter, but obviously falling short of guidance here for the fourth quarter?
I don't. I think this is an overreaction. I think there are some timing elements where a few deals that were expected to close in Q4 closed towards the end of Q3. I think if you look back at last year, the guidance for the second half is exactly the same as the guidance was last year. And I think that ultimately the company will execute, and you're going to start to see Adobe as one of the best ways to monetize AI investments that you were just mentioning in the enterprise segment. And I think you're going to see accelerating growth and improving margins. And this quarter didn't really change any of those thesis for us. I definitely understand the frustration given the implied Q4 guidance is below where consensus was for a key metric, which is a forward-looking indicator a lot of times to the growth rate. But I don't, it just, nothing changed in the fundamentals in our opinion.
Which of the Adobe clouds needs to see the most significant uptick or just demonstrate continued growth in order for it to pass through to the profit margin for the company?
Definitely the digital media business is the cloud that needs to see the biggest impact from AI monetization. I think that they have a number of different levers to do that with generative credits within the portfolio of Photoshop, Illustrator. I think some of the new launches and innovations they're going to be releasing at Max around the video model, I think that's a pivotal moment to unlock some of that incremental monetization in the enterprise. But I think that's the cloud that investors are really laser focused on to see how generative AI functionality gets ultimately monetized by the company.
Do you think that where do you think they are in that track, in that span of kind of delivering what the market is expecting, not the equity market, but what their consumer base and customer and client base is expecting for what generative AI layered into that digital media cloud should look like?
Yeah, I'll even step back a second. I think all of enterprise software companies are relatively early in that journey. I think they're figuring out how to get it to be useful for the user, how to get it to be repeatable, how to get compliance and legal to be okay with the data that's traversing those models and the outcomes that it's generating. I think of the general pack of companies, Adobe is much further along. I would put them almost right behind Microsoft in their ability to actually show real, disruptive ROI to those companies where they can understand how adopting generative functionality within their creative workflow really can increase content velocity and content generation capabilities at a much lower price point than they're used to, as most historically budgets within marketing really are going to the creative agencies. And I think Adobe has a chance to kind of bring that back to bear and really see kind of a win-win situation with customers.
You mentioned the fact just a moment ago that you think that this is a bit of an overreaction. The state of competition came up a few times on the earnings call, something I'm reading a lot about here this morning. How worrisome is that, do you think, not only for Adobe, but some of the other larger software players in this space when it comes to some of those smaller startup rivals that are looking to chip away at their market share?
Yeah, look, I think this is an exciting time in software. There's a lot of innovation happening. There's a lot of capital going into the space. There's a lot of really unique, exciting new players emerging. But I think that this wave of generative AI innovation, there's a lot of benefits to incumbency. I think those benefits rise when you go into the enterprise. I think the ability to already have large contracts that are approved, that are through procurement, that are through legal, that's a big advantage, both from a budgetary perspective, where budgets are not expanding or growing at the rate that some would otherwise want. And so you're looking at how to consolidate budgets, how to do more with less vendors. I think that's an advantage for large incumbents like Adobe. And I ultimately think that some of the bigger advantages that are going to accrue in this age of AI is the indemnification, is the legal protection, is the security that some of the larger vendors can offer, at least even from a perception perspective to customers versus some of the upstarts. I think that specifically for Adobe is a very unique competitive differentiation that is ultimately in our minds going to compound as they release more and more of these models and in multiple modalities.